$300 billion. That's how much global trade jumped in early 2025, led by a surge in US imports and EU exports. Sounds like good news, right? But here's the truth. Trade booms can fool us. When growth masks hidden risks, we lose. You, your job, your savings. In the next 5 minutes, I'll show you why this surge isn't as rosy as it seems, and what it means for you. Why it happened in the first half of 2025. Global trade rose by approximately $300 billion, a resilient 1.5 to 2% growth year over year. What drove it? US imports jumped 14%, businesses stocking up ahead of tariffs. EU exports grew 6%, pushing goods worldwide. Services trade, like logistics and it rose nearly 9%. A key engine in this boom. Financial Times. The headline appears optimistic. More trade means more jobs, GDP growth, and market confidence. But beneath the surface lie disruptions, price hikes, imbalanced growth, and growing tension. The hidden risk? Let me be clear, this isn't just a hiccup. It's a warning sign. Tariff front-loading US companies rushed to import before April. Tariff changes, filling warehouses rapidly. That spike may reverse soon. Geopolitical fault lines. New US tariffs on steel and aluminum threaten supply chains. China-US friction lingers. Russia-Ukraine, Middle East tensions. One conflict can send shocks globally. Developing countries saw a 2% drop in imports while developed ones flourished. Policy uncertainty. Banks and investors crave clarity, but rapid rate changes and inconsistent policies scare them off. UNCTAD flags this as the main barrier to sustained growth. Lopsided growth. Advanced economies are booming. Emerging markets are falling behind. The result? A fragile surge on top of structural imbalance. Trade isn't just physical, it's digital too. Big tech giants like Google, Apple, and Amazon dominate digital markets, controlling data, transactions, and regulations. In the UK, new rules will force Apple and Google to open their platforms, meaning more competition and better consumer pricing. EU regulators continue tough enforcement under the Digital Markets Act, especially targeting Apple's App Store. The EU is challenging megatech mergers to protect startup innovation. Why does it matter to you? If digital power stays concentrated, app prices stay high, innovation slows, services become monopolized. Restricting it restricts you. Your phone is now a trade channel. What you and your business should do? Explore Asia, EU, Africa, markets past the trade headline. Tip 1. Diversify, geographically and digitally. If your investments rely on US-China trade alone, same with digital. Use non-monopolistic platforms. Support creators, not gatekeepers. Keep your eye on tariff treaties, tariffs, visa rules. Growing services trade means talent moves matter. Businesses that offer alternatives to app stores, cloud platforms, can ride that wave. Tip 2. Watch policies, not just rates. Look beyond interest rates. Saw 40% user-base growth in 6 months, timed with regulatory rollout. Tip 3. Leverage policy moves. Europe's DMA and UK's DMCCA. Example, a European fintech startup that integrated with Apple's. Changes focus on digital skills, data, regulation, privacy. Another remains stuck in physical trade wars and concentration. These are the currencies in modern trade. Tip 4. Stay agile with trade tools. Flattened supply chains can benefit small players. Use FTAs, trade agreements, or digital trade rules. Look at Vietnam's recent alerts on EU tariffs. Acting early can give you the advantage. Tip 5. Think people first. Hiring. With rising incomes and better digital fairness, if geopolitics.com and policies stabilize, expect a sustainable global recovery. If tariffs escalate and digital blockades rise, expect trade fragmentation, supply chain disruptions, higher consumer prices, fewer global startups. One world thrives on digital fair trade and competition. Which one will you bet on? Final question to you. Are you positioning your business for the healthy side of global trade? Which market or digital sector will you invest in when the landscape What risk are you ready to sleep on tonight? Comment with your strategy. Together we map the next 5 years.